Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Keighley. He's CEO of CarbonFree, Bill Lese, managing partner at Braemar Energy Ventures, and Clerc, director of the Carbon to Value Initiative Program and interim managing director at Urban Future Lab by New York University Tandon School of Engineering. We are here to discuss scaling climate tech solutions for real-world applications in an evolving regulatory and technical environment. It is great to have all of you with us. Welcome to Trade Talks. I mean, Martin, such a fascinating topic when you think about the economics, the technology, the policy, the skill sets. Let's go around quickly, starting with you, Martin. Tell us about the work you're doing at CarbonFree.
Yeah, great. Great to be here, Jill. So we're based down in Texas, in San Antonio, and we developed what we believe is a game-changing decarbonization technology. So we focus on the reduction of CO2 from industrial sources. So we're working very closely with US Steel. We announced earlier this year a big project with them. And we make very low carbon, in fact, the world's first zero carbon mineral that can be used in making paints and plastics. So real world applications and uses. So the beauty of decarbonization is we're working on both reduction from smokestacks, and we're also working on creating lower carbon products as well.
Yeah, which is so interesting about the space because there is more than one solution, which we're going to get into.
Absolutely.
Bill, tell us about the role that Braemar has in climate tech.
Sure. We are a 22-year-old venture capital firm, which I co-founded, for the purpose of focusing on climate tech, sustainability, and environmental solutions that are market-driven. We invest across 4 sectors. One is transportation, the second is power, the third is resources, which is fuels, chemicals, materials, and carbon capture and utilization. And the last area is the built environment. Some people call it infratech, but the built environment, what goes on in buildings and houses and factories.
Yeah, which is so interesting because you think of climate tech as something newer, but it really has been around for multiple decades, to your point. Tell us about the work you're doing at NYU, one of our local schools here in New York City, Fred.
Yeah, thanks for the invite. We are Urban Future Lab. We've been around since 15 years, to your point. We're not really new here. We help young companies that have solutions to climate change to scale and commercialize, typically from pre-seed to Series A. And they stay with us at our incubator in downtown Brooklyn, 2 to 3 years on average. We also have programs where we help companies through an accelerator for 6 months to help them scale. And we have worked with about 170 companies so far that have raised $2.5 billion in private capital. And with survival rate about 80%, which is kind of the opposite than the national average. So there is definitely value in getting support from incubators like us.
It's so interesting, Bill. I want to talk more about this because, again, I think climate tech is viewed as something that's newer. Tell us about the industry at a high level. What are some of the challenges that it's facing? And is this a one-size-fits-all solution?
No. I mean, there are many solutions and many approaches that need to be developed. And this is not something new. This is something that's been happening over half a century or more since the first Mideast oil embargo, really, when this is being addressed from a security perspective, as well as from an environmental and more recent years climate issue. And the approaches to different industry sectors have varied quite a bit, depending upon what's based around capital efficiency, based upon the ability to something we're going to talk more about, but scaling and what time it takes. And I'd probably say lastly, the ability to deliver a pragmatic solution that's doable in a time frame that matters. So if something's out 20 years, I'm suggesting you don't do it, but it's not going to, the economics get tough if you're market driven.
Yeah, well, I mean, it certainly does. And Martin, at the end of the day, these are capital intensive, R&D focused projects that take time. You're not just going to turn this ship around overnight because the products simply exist.
Absolutely. I think that's one of the things that we tend to forget with both the energy transition and the whole decarbonization space is to do any of these things, you need real manufacturing plant. You're either creating plant which is going to capture the CO2 and then use it and recycle it to make real products. And we've had 30 or 40 years of really a dearth of manufacturing. I've been in chemical manufacturing for 35 years, and all the mantra from our investors was we don't want to invest in real steel and real plant and real concrete. Now we need to build real plants. So there's a sort of manufacturing renaissance going on, which is, I think, is a challenge for both the capital markets, because they're not used to investing in big capital plants. They like software solutions, they like digital apps. And then there's a whole question about the skill set to who do that. Who's going to actually, do we have enough raw materials? Do we have enough supply chain lines? Do we have enough, fitters and boilermakers and carpenters to actually build the plants out? So it's a whole sort of brave new world, really.
Yeah, and it certainly is like with the work that you're doing at NYU, right? You're helping to build up those skill sets, and we spoke about this offline before, but this really does lend to that public-private partnership and skilling from the academic level all the way through the trades and the engineers, and focusing on the right skill sets.
Yeah. And another big difference is the time to market, compared to software solutions. 2 to 3 years versus here, we're talking about potentially up to 10 years before you've been able to de-risk and scale your technology. So that's why we need a lot of support. This solution needs a lot of support, but also industry partnerships. So, a lot of these solutions, they don't grow in a vacuum. They need to be integrated in existing value chain. You need to retrofit the solution. You need to adapt the existing industry. And so we believe that a lot of these solutions won't scale without industry partnerships. That's why a lot of our programs are tailored towards pairing startups with large corporates and facilitating that uncomfortable, naturally, there's no fit between a very young disruptive startup and a large corporate. So we help make that partnership. CarbonFree now is doing with US Steel, and we have other large corporates on our partner like BASF and Shell and others that help the company scale and integrate. So that's a really important point, I think, for scaling climate solutions.
Yeah, and Bill, part of this is too, there has to be that public aspect in it, because energy, climate tech, they're heavily regulated spaces, right? So with the changing of the administration here in the US, how can that potentially impact this space? Because there could be a recalculation of how policy looks and how these projects can get online.
No, I think it's inevitable that this recalculation is going to occur. That said, there's an awful lot of forces already driving what's been done in the last few years. I would say that there's a move towards more pragmatism, towards more that are less developmental, and not necessarily not development, but less early stage, and moving towards more middle stage than it was before. That doesn't forego, though, any of the earlier stage opportunities for say, but people want things to get to market. And for example, CarbonFree is one of our portfolio companies, and that's the position they are now. They've taken first generation to market and now moving into second generation. So that's quite exciting.
Yeah, I think building on what Bill was saying, I think it's very interesting in even just the last 6 months, the whole language has started to change. I find myself going to a lot of conferences and things, but we've started moving from early stage technology development and the sort of incubation stage and building out technology. The language is now much more about building out businesses and changing that to a very, actually we need to build businesses which make money and self-support themselves. We've been a strong advocate of that for a long time, because we are going to get different waves of support from government, from different forms of regulation. We don't have a common approach globally to that. We're never going to have that. So businesses need to stand on their own 2 feet. This isn't we solve the problem once. If we're going to get to net zero by 2050, we still have to continue capturing and doing something with CO2 beyond 2050.
Right.
It's a here forever. The only way that's going to survive is if we have true business cases.
Which is interesting. I think that's reflective of the capital markets overall. And we're talking about climate tech here, but the valuation resets that we saw in 2021 and 2022, operational efficiency is certainly going to be valued more highly than a great story, right? Or governance is a requirement now, and being able to commercialize this and not just create solutions, but have an identifiable problem and have a solution to execute on that. I mean, there has to be some sort of market impact here, because the dollars are just not going to come in because the story sounds great. Yeah,
no, I think we see a lot of the successful companies, the climate impact is secondary in their value proposition, right? So we just onboarded a new company called Helix Technologies. They cut the energy used for AC by a factor of 2. So you cut the bills by 2. You cut the whole energy demand by 2, the stress on the grid by 2, and by the way, you emit less CO2. But that's kind of the undervalue or under on the whole value proposition. And I think this is the kind of solution that we will see get into the field more rapidly. And that's why we saw with EVs and just superior products that are entering the market, that's how we can have an impact.
It's the old green dollar story, you know, the green dollar sort of actually, and that sustainability drives real progress. I think it's interesting, you touch on it in terms of, like, obviously the case, very top of mind at the moment is the change of administration, what's that going to mean for these technologies. It doesn't have to be a wholesale bad thing. It can actually be a good thing to shake things out a little bit, get us focused on real business focus. You know, the good support from government is great at the incubation, the early stage. We know the old adage that, you know, it's not government's place to pick winners, and I think we've seen that. We've seen support of a lot of technology, but it's businesses' role to pick winners.
Right.
And we're going to see that shift now to a much more of a business and market focus. That may not be a bad thing.
Yeah.
Especially when the thought is that the benchmarks are going to be very economic and market driven and leadership driven, and especially when it comes to national security, you're going to want, you know, to have a substantial role in this.
Yeah, and I don't think it takes away from innovation. I think what you're looking at now is the realization that we have to implement things in a way that's truly getting you to scale, do everything we can to work between the private sector, obviously entrepreneurs that are very savvy about how to manage resources, and where the government can really play a role to really saying, hey, you know what we started at university level or what we started in somebody's garage kind of thing is now at the point where we can catalyze it to a point where we're really going to open markets up and create more of a circular economy.
Right, and that's the great point, because these types of skills, right, and the opportunity that it creates, the jobs, the salaries, it only goes back into the economy. I think it has to be more deliberate when it comes to the strategy though, Bill. Perhaps not leapfrogging over, we were talking about EVs and comparing that to ships earlier in the green room, going from combustion straight to EV, perhaps that hybrid in between, or having redundancy, having a backup might be a little bit more digestible. So having things affordable at scale and the user experience at the end of the day, which counts for everything, I think this strategy has to be really deliberate.
I agree. I think the customer is always right, and if the customer can be eased into a change of technology, that doesn't mean that EVs are negative or anything like that, but you're just creating a window for people to begin to understand and adjust to an electrically driven vehicle that is different than an internal combustion engine. So I think that, I honestly believe that hybridization and laying the groundwork for incremental application is a very good thing.
Right. Yeah.
One thing I would just compliment on the change of administration, let's not forget that the US is assembly of states, right? And a lot of energy decisions are made at the state level. So I think we're going to see, like we saw in 2016, coalition of states and energy policy driven by states. New York is a great example. You know, they have one of the most aggressive net zero targets, 100% reduction by 2040. Massachusetts just passed a bill, $1 billion over 10 years it's an economic development bill. It's nothing, it's climate. They want to use climate as the next industry for growth. Clean energy in the US grows 2 times faster than the US economy, has created 250,000 jobs over the last year. So there is an economic development growth opportunity story here that I think will resonate with any administration, to be quite honest.
Right, that's a great point that you bring up. You have to know your audience and who you're speaking to. You know, speaking to climate tech practitioners is different than when you're trying to get policy or you know, funding through. You have to be able to understand your audience and make sure that you're focused on the customer and user experience, because at the end of the day, we want to get from point A to point B, right?
And I think I would take the example you made of sort of EVs and hybrid, and we sort of jumped maybe over that, and maybe we shouldn't have done. On the industrial emissions, exactly the same. I'll take the example of steel. We're working with US Steel. There are some great technology changes for steel out there. You know, I was listening to something on the radio this morning about a great project up near the Arctic Circle in Northern Europe, fantastic. But that cannot be transferred to all places where you need to make steel. And we have trillions of dollars of invested assets. So we can't do that hybrid leap. We're not going to solve the decarbonization of steel by going to a new technology based on hydrogen or different place. We do need to decarbonize the steel assets we have today. Right. If nothing, because there are millions of jobs linked to those manufacturing facilities. So it's incumbent on us. I love what the head of sustainability at US Steel says. The way she positions this is they're all about supporting progress, not perfection. We're not going to get right to the endpoint answer. What we need to do is collectively make some progress. And certainly at CarbonFree, that's what we're all about doing. Let's take those first incremental steps. Let's make major changes in terms of decarbonization, and let's build out real profitable businesses that can reinvest in themselves.
I mean, that's a great point too, if you want to bring it to a personal level. Oh, I won't bother recycling this. Is one can going to make a difference? Well, it does. Once you start multiplying those cans by millions and billions, exactly. That's part of that snowball effect. And I also think just because when you think about climate holistically, every region, every area of the world is different, isn't it, Bill? So that just implies that there is not a one-size-fits-all solution just because the climate is dynamic.
Absolutely. I mean, if you look at different countries, some smaller, easier to form a policy. There are some countries, like certain Scandinavian countries, that are, when it comes to something like EVs, are 80, 90% EV, which is extraordinary. And that is because, based on circumstances and the ability for those particular societies to be able to endorse that quickly. But not everybody is going to be in that situation.
Of course.
Take somebody who lives in a developing country where electricity isn't readily available, but you can still have transportation through using hydrocarbons. That's going to work for a while. If you can then figure out ways to, hybridize the vehicle, so then you can still have some electric, but then you can, that's more practical. Right. In the case of CarbonFree, the ability to take this massive amount of assets, and not just the steel industry, steel being one of them, and being able to convert it into valuable products and be flexible and working with different types of industries, that's really high value, because it means you're an adapting solution as opposed to forcing a huge change in the infrastructure.
You make a great point too, and that's why we've seen areas of the world that are able to leapfrog physical infrastructure as well as software and banking infrastructure. I mean, digital assets, we have the same argument in this space as well. We can't just plug and play frameworks like you can in the EU when it comes to AI or digital assets, or we've seen in Southeast Asia where they're able to implement some of policy around these solutions. Legislating in the US is a very different animal. You have to build on top of that legislation, so it's not, that's part of why it takes time as well, and I think we have to recognize that, Fred, that there is a process that we have to go through in the US, just because we do have these legacy assets and institutions.
For sure, and I think to Bill's point around sort of the export opportunities, right? What is the other positive impact of climate tech? The economic opportunity is going there and with US technology and export to the global market. So you have incredible innovation in the US on geothermal, for instance. We have a portfolio company called Braemar Energy. There are others out there that are developing the next generation of geothermal. This is a type of technology that can be replicated everywhere around the world, and it doesn't have to be necessarily in the US. And so that can be also a great driver of economic progress and growth. So I think that's a good story about climate tech, right? Why it's investable.
Yeah, it certainly is. And I think as these become more scalable and we learn more about them, that roadblock in terms of, Bill, capital intensity and the amount of time, particularly when thinking about private investments and partnerships going into these types of technologies that have to be developed, data begets data, product begets product, it'll be more accessible. And I think that's really the key, like we were talking about before, being deliberate around strategy. Yeah,
I mean, I think having an understanding of what it takes to go into a project and not be blindsided by just the technology and that it's exciting and all that, and understanding and having the right experience and brain trust around to build that ecosystem early is really, really important, so that you can get to a scalable solution. Yeah. And that's what companies like CarbonFree are doing, and I think that's where it's headed, and a lot of things that Fred's involved with as well. We need to figure out how to build that ecosystem and that knowledge base so that scale is not such a daunting problem.
There's another good area of where working with existing industries is you can move faster. Yep. This sort of progress, not sort of perfection. So a good example of we're going to be building our plant on the site at US Steel in Gary, Indiana. Challenging environment for jobs and for sort of wealth and things like that. So we're building on that. We'll be creating 300 or 400 jobs, both directly and indirectly there. We're building on an existing brownfield site. So all of those issues of long-term permitting. And if we look like pipelines and underground wells for sequestration of CO2, they may be sort of 6-7 year sort of permitting pipelines. Our permitting will be 5 or 6 months because it's an existing umbrella. We also have the existing skill set there of of operators, from the union labor, from the construction capability to be able to build the plants out. So I think building on what we have rather than trying to invent something completely new, much more powerful, and we can move much quicker.
I would agree with you. You know, having that nimbleness, right, of a smaller company, and
way of
then
putting it,
the scalability of something like a U.S. Steel makes so much. Why reinvent the wheel organically when you can just acquire the technology and the intellectual property? Have to wrap it up there. 20 minutes goes by fast. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.